It's evident that the previous 2 years have been among the finest in the market's history when looking at the stock market. Since the collapse in 2020, the S&P 500 has increased by more than 100%. That's never happened before. That isn't generally the case. Historically, you may expect an annual increase of roughly 10% at most, and 8% if we're being careful. However, as we approach 2022, January proved to be disastrous. The market as a whole collapsed. The S&P 500 index dropped over 10%. Everything fell down, including Apple, Tesla, and Meta. Since March 2020, this has been the worst month. Welcome to Finance Dojo. We aim to be the best personal finance educational channel you'll ever need. Click that subscribe button and the notification bell right now so you won't miss out. While equities have been declining, the housing market has continued to expand. Extremely low interest rates have continued to drive prices higher and higher, and experts have predicted a catastrophe from the start. But where is the crash? Why does the housing market continue to expand? Why hasn't the housing market collapsed yet? The housing market is fairly predictable, and the Fed can simply regulate it. Everyone needs a roof over the head. Thus, there is always a need for houses. Even if you have shelter, a house is one of the finest assets to invest in since it generates income. The demand for homes will always be there, but it fluctuates based on the prices. Because the economy was at its top from 2017 to 2020, housing prices did not rise at all. If they were increasing previously to 2017, investors may only observe stagnation in the property market. Mortgage rates were at 4 to 5%, which hampered demand for homes. But in 2020, the interest rates were reduced to virtually 0%, making mortgages much more accessible. Purchasing a home at a 2.3% interest rate is one of the most important financial choices you will ever make. That is what spurred the demand and caused prices to rise by more than 20%. That demand will diminish as soon as those ultra-low rates go, as experts have predicted all along. However, guess what? The Fed has not raised rates in the previous 2 years. They kept them at less than 1%. Rates remained near 0% at the time of writing. However, mortgage rates are higher now than they were in 2020. Of course, Federal Reserve Chairman Jerome Powell has stated that the central bank wants to raise interest rates this spring. But that isn't a guarantee because the Fed often doesn't do what they say until they do it or misrepresents facts to avoid market turmoil. They continued repeating that inflation isn't a concern in 2020 and 2021, even though the Fed had the greatest data available and knew it was a problem. But to calm everyone worried, they kept saying that inflation is around 3%. In any case, higher interest rates are a matter of when, not if. It's standard procedure. At the end of the day, inflation above 3% is unsustainable. The major concern is whether the market would fall if interest rates are increased. The answer is most likely no. The housing supply has dropped considerably since the 2008 financial crisis. This graph clearly shows how many fewer residences have been constructed since then. The government realized that if it didn't regulate the housing market, we may experience another catastrophe. Therefore, housing supply was already constrained, causing real estate prices to progressively climb. However, the pandemic just decimated whatever supply chain remained. Despite the fact that the pandemic has nearly 2 years, the supply chain has yet to recover. So even if mortgage rates rise significantly, house prices will not fall since there aren't enough properties on the market to begin with. This supply network has been in the making since the conclusion of World War II. For example, to create a single timberland boot, supplies would be flown from 5 or 6 different countries to a facility in Thailand where they would be assembled and then sold all over the world, including the United States. As a result, a closed facility in one location might have an impact on the remainder of the supply chain. Companies are redesigning their whole supply chains to prepare for another pandemic. For example, by shifting facilities closer to where the final product is marketed. That will take a while as we learn how to live with this infection. About 91% of the house construction business polled by Zonda said they were having supply chain issues. Building a home takes longer due to a shortage of materials and delays, and increased input costs are adding to rising property prices. It's the worst scenario since at least World War II, and they aren't the only reasons. Corporations are purchasing homes to rent. Around 20% of properties are purchased by corporations, significantly reducing the number of homes on the market. However, inflation is by far the most serious concern. Inflation has an important emotional effect. People are less inclined to sell now and wait a year or so if they expect their house will cost more in the future, especially in the near future. What do you think that means? With fewer properties on the market, prices will continue to rise. Why would you sell your home now if you could sell it for 10% more before the end of the year, for example? So unless inflation is controlled or supply networks are restored, housing prices are unlikely to stabilize. Why hasn't the Fed raised interest rates yet? The Fed's job is to ensure that the economy is expanding as well as combating inflation, and the previous 2 years have proven to be far more unexpected than anyone had anticipated. At first look, it appeared that the problem would be fixed as soon as we develop a vaccine. However, the government struggled to vaccinate enough people, and new strains of the virus continued to emerge that were not protected by the present vaccine. Finally, by the time we worked out how to cope with the new variation or persuaded the rest of the population to get the vaccination, those who had already had it had to get it again. It's an endless crisis. Same government leaders are realizing that no matter how bad the virus is, there is no way to completely eradicate it, and even if we could, it would be so expensive that isn't worth it. So we're learning to live with it. As a result, the Fed is keeping rates low until it's evident how the economy will respond to these additional constraints. Something we can be certain of is that prices will not rise by double digits this year. It'll most likely be in the range of 5 to 8%, if not less. Because of the lack of properties on the market, even individuals who are unable to make their mortgage payments may still sell their homes for a profit, which is another reason why we should not expect a housing catastrophe this year. Things will become a lot evident if the Fed is successful in bringing inflation below 3%. At the end of the day, these are all forecasts based on current events, but only time will tell what will happen in reality. As always, this video is for educational purposes only and not financial advice. You should always do your own research and speak to a financial advisor before making any investment decisions. Thank you for watching and see you in the next one.